If you want to really look at the root of the problem, at least from the beginning, technology was a real mess. The crypto decline, part of the many headaches for the tech sector, an ugly picture on Wall Street at this hour that has investors shuddering. Yes, Bitcoin is falling precipitously right now, and we do have Bitcoin, since we mentioned it, at $4,144. Folks, we were above 5,000 yesterday. Names like Amazon, Apple, Facebook that once led the market, they're now driving it down. This is a second tech giant went red for the year. Facebook and Google parent Alphabet posting losses year to date. But while tech giants have lost more than $1 trillion in collective value compared to the recent highs, our next guests say, hey, there's some names so cheap right now, they could be considered bargain basement deals. With more than $300 billion in assets under management, Neuberger Berman's senior research analyst Daniel Flax joins us, and we're also joined by Mobile Nation's senior editor Russell Hawley, who intimately knows and covers the technology industry extensively. Daniel, I'll get to you first. What do you see as the root of the sell-off? It's either retail, tech, trade, who knows? Multiple issues here.
Liz, we see the root of the sell-off as being concerns around slowing growth, which could be compounded by tariffs, trade wars. Certainly, there's increased regulatory scrutiny around technology as well. And if we think about these cyclical headwinds, very few of the companies, and certainly within the technology sector, are immune from that. But if we step back and think about what's going on, if your viewers appreciate, of course, the bigger secular trends that are at play here, we all see the build out of the cloud, the mobile infrastructure, e-commerce, really the creation of digital assets that are changing society and our industries, which I think all of us, and certainly your viewership, appreciate.
Russell, to that point, what do you think here? What meaningfully has changed so much that many of these names on the screen, Facebook, Apple, Amazon, saw highs relatively recently, whether it was in the last 2 months or 4 months? What changed? Fundamentals? Something else?
No, so it wasn't one big thing. You have to take a look at kind of the landscape over the last couple of months, and there's been little things, or I say little, but there have been things that have impacted each one of these companies very differently. Facebook has been in the middle of several regulatory, very serious meetings about what's going to happen for the future of how information is shared on its service from a U.S. government perspective. Amazon hasn't even finished shipping its entire portfolio of products that it announced this year, and Alphabet is currently dealing with the regulatory issues in the EU. So it's not one big thing that's affecting all of these organizations, but it's all kind of happening at the same time.
Yeah, as the selling is happening at the same time. The Dow is right now down 546 points. But Russell, as we all like to say, there's always a trade. What are your screaming buys that you see in technology right now?
The two big things that we're seeing right now that are still really interesting are Apple and Amazon. You know, Amazon is still really focused on delivering a lot of very positive things throughout the end of the year, and has only just this week started shipping things that are really exciting for its whole Amazon TV service, including over-the-air systems that are going to be really good for people who are fans of cord cutters. And Apple is still doing a ton of incredibly exciting things and services that are only growing.
Daniel, I need to hear from you. You sit there in the morning meetings at Neuberger Berman. You look at these names. Maybe tomorrow or this afternoon, what's the screaming buy that you see?
The screaming buys, plural, that we see, Liz. Let's take Motorola Solutions, a company that makes software. It makes video and analytics for the public safety, the police, the fire. We think there's a very attractive growth story there and expanding margins. Cisco, the company's executing extremely well in areas like security, and we think earnings will be better than the market expects over the next year. Alphabet, the core search business, remains healthy. The YouTube assets growing nicely. We think they have an underappreciated opportunity with the Google Cloud platform, and longer term areas like autonomous driving with Waymo. And we'll round it out with Microsoft, which is a company we see continuing to execute very well in terms of transitioning their customers to the cloud. When we speak to technology buyers, the shift to cloud and this next generation of infrastructure is really very much in its infancy.
I got to push you here. I'm surprised about Motorola Solutions, because while Google is in a bear market, so to me that's maybe an obvious screaming buy, Motorola Solutions is still up more than 30% over the year to date. So why would you jump in there? Is it really low enough right now?
Liz, when we look at the earnings power of Motorola Solutions, They're newer areas like video and analytics. And so that's a very exciting growth opportunity. When you think about the command center, and really that's where first responders are getting information. And so things like digital texting and video, a lot of these command centers aren't able to process that and get that to the men and women in the front lines. And so Motorola is really at the heart of this transformation. And so we think the earnings power here is significantly underappreciated.
Russell, Donald Trump is in a lockjaw fight with the Chinese regarding trade. We know that many of these technology companies have assembly lines that have a path right through the middle of China. Do you see that starting to affect some of these names? I mean, Apple's an obvious one.
Apple's an obvious one, but we've also seen that this is, something that Amazon and Apple have been preparing for, as they have kind of their separate fights to deal with in moving as many different facilities in as different places as possible. We're starting to see, companies trying to build facilities here in the U.S. for that reason, to try and avoid these kind of problems. So, yes, I think it's going to continue to be an issue.
Daniel, Chinese internet stocks, Alibaba, and all of the rest, Tencent, do you see any interest in those? They are beaten down big time.
Liz, we do see opportunity in Alibaba. We think while there's certainly some nearer-term cyclical concerns around the Chinese economy, we think that the longer-term growth outlook for a company like Alibaba is significant. They're really at the core of a lot of the transformation that's going on there, and we see opportunities for them to grow internationally. They have a nascent cloud business, similar to what an Amazon or a Microsoft are doing here, where we see terrific growth. And so for those of your viewers who can really look out 1 to 2 years, we think Alibaba represents a good opportunity at current levels.
We're thanking Daniel and Russell very much for jumping in the chair as tech is kind of enduring quite the wreck right now as we see the NASDAQ, though still off the lows of the session, down triple digits. We should mention Dow Jones Industrials now down 521. We've clawed back about 100 points of losses, which is certainly good news for the bulls, but still deep in the red.